Your savings account is not safe. Right now, somewhere in the world, a financial system is collapsing, stock markets disappearing overnight, banks running out of money, entire countries going broke. The experts will act shocked. Nobody could have seen this coming. They always say that. I've studied every major financial collapse, and they're all the same movie with different actors, same script, same warning signs, same ending. Here are the 5 ways money dies and why the next collapse is already in motion. Stock market crash. When reality crashes the party. A stock market crash is when prices fall so fast it makes your head spin, not a small dip. Complete wealth destruction in hours. Here's how it always starts. Prices climb for months. Regular people quit jobs to trade stocks. Your barber gives investment advice. Financial news celebrates new highs like New Year's Eve daily. That's when you know the party's ending. Picture the late 1920s. Everyone borrows money to buy stocks because prices only go up, right? People become millionaires weekly. Newspapers call it the new era. Then October shows up like an unexpected tax bill. 4 trading days. 1/4 of the market's value disappears. Rich Monday, broke Friday. What happened? Borrowed money meets gravity. When prices fell, people sold stocks to pay loans. More selling meant lower prices. Lower prices triggered panic selling. It's like dominoes, but each one represents someone's retirement. The aftermath lasted 10 years. Banks failed, unemployment hit 25%, and the good times became the worst hangover in American history. Yet here we are, we learned absolutely nothing. Stock bubbles keep happening because greed has a terrible memory. Stock crashes are just the beginning. When markets fall, they drag down the banks that fund them. Banking crisis. When trust disappears. Banks work on a simple promise. Your money sits safely in their vault, ready whenever you need it. That's not exactly how it works. They loan out about 90% of deposits to other customers. Your savings becomes someone else's house payment, car loan, or business loan. Works great until everyone wants their cash back simultaneously. It's like a restaurant that has 200 seats but only 20 chairs. Imagine rumors spreading through a financial center. Maybe banks made bad loans. Maybe there's a scandal. Maybe people get nervous. Lines form outside banks. People want their money now. Banks realize they can't create cash from thin air. More people see lines. More want to join them. What starts as whispers becomes panic feeding on itself. Lehman Brothers. 2008 thought they were too big to fail. $613 billion in debt, largest bankruptcy in U.S. history. The entire global financial system nearly froze. Silicon Valley Bank, 2024 died in 24 hours. $42 billion withdrawn in a single day. What causes every banking crisis? Banks lend money to people who can't pay it back, then act surprised when those people don't pay it back. When banks fail, credit disappears. Businesses can't expand, people can't buy homes, and the economy stops. That's why governments started protecting your money, because keeping people calm about their deposits costs less than rebuilding everything after mass panic. But sometimes the crisis isn't in the banks themselves. Sometimes it's in what everyone's buying with all that borrowed money. Housing bubble collapse. When homes become lottery tickets. Real estate should be about shelter and stability. During housing bubbles, it becomes the world's most expensive casino. It always follows the same script. Home prices rise faster than paychecks. Instead of asking why, everyone assumes fast increases are normal. Banks give loans to anyone breathing. Real estate agents drive luxury cars. It works like this: prices double in 5 years. People buy unaffordable houses with incomprehensible loans. Banks package bad loans into complicated investments and sell them globally. Everyone's getting rich, everyone's confident, everyone's about to learn why they teach economics in school. Then something changes. Maybe loan rates go up. Maybe people realize tiny apartments shouldn't cost more than yachts. Maybe economic reality gets tired of being ignored. Buyers disappear faster than free pizza. Suddenly, nobody wants houses at crazy prices. Desperate sellers start cutting prices. More price cuts create more panic. People who bought at the top realize they owe way more than their house is worth. What causes this madness? Banks giving easy loans while everyone believes prices only go up. The aftermath brings foreclosures everywhere. Construction stops completely. Banks that bet on housing start failing one by one. The housing crash spreads through everything because every part of the economy connects to real estate somehow. This exact thing happened in 2008. A housing bubble in America caused a global financial crisis when banks had spread the risk everywhere. Housing crashes destroy private wealth. But what happens when entire governments run out of money? Sovereign debt crisis. When countries go broke, national governments print money, collect taxes, and sell bonds that investors think are super safe. Countries can absolutely go bankrupt when their debt grows faster than they can pay it back. Think about a developed country spending more than it makes for decades. Every year, spending beats income. Solution? Borrow more by selling government bonds. Works fine until debt becomes so huge that interest payments eat the entire budget. The government borrows money just to pay interest on previous borrowing. It's like using credit cards to make payments on other credit cards, except with nuclear weapons. Markets eventually notice this bad math and want much higher interest rates. Higher rates make the debt problem way worse. The government needs even more money at even higher rates. What causes it? Spending more than you make while hoping tomorrow will somehow be different. When debt crises explode, governments face two terrible choices: stop paying their debts completely or cut spending brutally. Public spending gets slashed, taxes go way up, unemployment skyrockets. Greece learned this hard lesson starting in 2010. The government had been lying about its finances for years. When the truth came out, the country needed multiple bailouts and went through a depression that made the 1930s look good. Even debt crises are nothing compared to the ultimate financial nightmare, when money itself becomes worthless. Currency collapse. When money dies, your country's money represents trust in your nation's economic future. Currency collapse happens when that trust dies completely. This is financial doomsday. When currencies die, personal savings disappear instantly, imports become impossible, and entire societies go back to trading like cavemen. Currency death starts with accelerating prices. First 10% yearly, then 50%, then 100%. People rush to spend money before it loses more value. Governments worsen it by printing more money to pay bills. More money chasing same stuff means higher prices. Death spiral destroys the money system. Germany. 1923 showed what hyperinflation looked like. People carried wheelbarrows of cash to buy groceries. A loaf of bread cost 200 billion marks. Argentina 2001 proved it could happen to modern countries. The peso lost 75% of its value overnight. Middle-class families woke up broke. Venezuela 2018 revealed the speed of collapse. Restaurant prices changed while you ate your meal. Coffee went from 450 bolivars to 1 million in just 6 months. What causes it? Government spending insanity finally meeting economic reality. The aftermath brings complete social breakdown. Middle-class savings disappear overnight. People lose faith in all banks. Basic necessities become luxury items only rich people can afford. Each collapse follows the same script, and regular people always pay the price for their leaders' failures. There you have them. 5 different ways money dies. Every financial collapse exposes the same truth. Our money systems are built on too much debt, too much speculation, and too much belief that this time is different. And the next one, already in motion. Global debt just hit $307 trillion, 3 times what the entire world makes. Asset prices have lost all connection to reality. Central banks print money like there's no tomorrow. U.S. commercial real estate is falling right now. Office buildings worth half what they were in 2019. Regional banks are holding all that worthless debt. In our connected world, your local crisis becomes everyone's crisis. In 1997, Thailand's crisis reached 3 other countries within weeks. 2008 started with American house loans. Within months, banks collapsed worldwide, governments fell, countries went broke. Sri Lanka 2022 shows how everything connects. Foreign currency shortage became fuel shortages, became food riots, became government collapse. 6 months from economic crisis to revolution. Someone, somewhere, is always about to rediscover that math still works. The rest of us watch the same movie. That's how money dies. Subscribe to spot the next collapse before experts start saying nobody could have seen it coming.